We also haven't even mentioned the fact that we got some econ data out this morning, jobless claims dropping to a new low since the start of the pandemic. So for more on all of this, I want to bring in our next guest. We're joined by Austan Goolsbee, is professor of economics at the University of Chicago Booth School of Business, also former chairman of the Council of Economic Advisors during the Obama administration. And Austan, it's great to have you back on the show. I don't think there's much correlation, obviously, between the sell-off that we're seeing today and the data that we got out this morning, but just taking a step back and talking bigger picture at this point, what do you make of today's sell-off after that massive run-up we've seen in the markets over the last several months? And then, of course, this comes while the economy continues to lag.
Yeah, well, it was a tough day for investors for sure, but it was actually a pretty tough day on the job market. They changed the methodology of how they keep track of how many people file for unemployment. So they stopped doing seasonal adjustment. If you do it on an apples to apples basis, I do think that today was one of the first days in a while where the market and the economic data were moving together. So it wasn't like that horrible jobs day where we have the worst jobs ever and the stock market goes up. Here we had a tough day in both. So I think it's becoming clear that the easiest low-hanging fruit in the job market, we've mostly used up. The temporary layoffs, most of those people are now back. And so now we've reached the much harder middle period where we got to try to prevent permanent job loss. And Washington, D.C. is definitely not helping in this category.
Also, what do we need to see in order to prevent that permanent job loss? I mean, we've been listening to some of the other points out there, and they've been taking a more positive spin maybe on some of the recent economic data that we've got now. And they're saying that maybe some of these better than expected numbers will lead to the argument that, hey, maybe we don't need to get another stimulus package out of D.C. But it sounds like your view on it is that we still need Congress to do something.
Yeah, I think we need Congress to do something. And I think that mentality that says, well, we're only 14 million jobs short of where we were before, not the expected 15 million jobs short, is a terrible way to think about it. I think we've got to fill the gap and get back to controlling the spread of this virus so that the economy can return to something like normal. And we need rescue and relief. I don't even think of it as stimulus. I don't think it's a conventional stimulus of the form that's going to jumpstart the economy. I think it's literally, if you start seeing mass bankruptcies and shutdowns of small business, of commercial real estate, and people getting foreclosed on in their homes or evicted from their rental apartments, I think that's going to redound in a negative way into the financial sector. We've had the advantage that the banks have been much better capitalized, pretty well capitalized compared to the 2008 period. But if we start getting massive losses like that, I think that essentially there's no lower bound, or there's a hard cap on how much we recover.
Hey, Austin, Rick Newman here. So we are making gradual progress in some parts of the economy. We may see that we gain some new jobs in August when the numbers come out tomorrow. So I just ask, what is your forecast, let's say, for 2 months from now, which will be right around Election Day? Do you think people are going to be feeling better than now, worse than now, no different? And how long till it starts to feel like we're really getting out of this?
Yeah, those sound like they're very close, but actually there are multiple deep issues in those. I think by Election Day, we saw a very rapid rebound of 25% of the whole. Okay, and as I said, if you let up 21 runs in the first inning, it's great that over the next 3 innings you kind of scored back 9 runs, but you're still way behind. And I think most people know that. I think anybody who's kind of making the argument that, well, this was a good month and filling 10% of a horrible hole, therefore isn't the economy great? I think anybody saying that's going to be in high risk of sounding really out of touch. We don't know, though, what are the political implications? Are voters going to say the unemployment rate is double digits on Election Day, throw the bums out? Are they going to say, well, it went way up and then now it's coming down. So we'll give the White House some credit. We don't know, because there never really has been anything that happened this fast before. But I don't think objectively the conditions are going to be very good within 2 months.
Austan, it seems like we've gotten this wave of announcements coming from some of these larger companies on job losses, permanent job losses. Airlines, of course, looking at that October deadline, now coming out with their announcement with the stimulus coming to an end. We had Coca-Cola coming out. We had the casinos coming out talking about thousands of job losses. I'm just curious how you make sense of all of that and how much more you think the job losses are likely to accelerate on the corporate front.
Yeah, if all of that hinges on the number one rule of virus economics, which I always say, the way to help the economics is anything that controls the rate of spread of the virus. If we can't slow down the rate of spread of the virus, then I think there would be thousands, even millions more people who are going to get unemployed and be adding to the rolls. If we could get control of the virus, I think we could get on a path very much like what most of the other advanced economies are on, where they took very intense hits, but they're rebounding at a pretty rapid rate. Seeing these permanent job losses, yes, so far they've mostly been concentrated in sectors that you would expect. Look, airline demand is way down, so you could see that once the relief is kind of running out, that they were going to lay off people permanently. As credit conditions do not improve, and as demand doesn't rebound as fast as we want it to, this stalling out of the improvement of the job market, the fact that we had a great month, then the next month was a very good month, then the next month was a pretty good month, and each month the gains are about 40% below what they were the month before. That's not a good sign. That's the path to stagnant. And stagnant is really not what you want when you're starting at the lowest base really ever.
Austan Goolsbee, always great to have you on the show. We hope you come
Thanks
back.
for having me back.
Thanks so much for taking the time to join us today.
Yeah.